Hey everyone, and welcome back to Market Minute. Today we're not just reviewing Amazon's Q2 2025 earnings, we're building the case for why this could be the decade that defines Amazon as the ultimate long-term investment. While short-term traders focused on quarterly guidance, smart money is looking at something much bigger. The infrastructure revolution that's quietly building the future of business. Amazon isn't just an e-commerce company anymore. It's become the backbone of the digital economy, and the Q2 numbers prove it. Let me show you why Wall Street's short-term reaction completely missed the long-term opportunity here. Amazon delivered $167.7 billion in revenue. That's 13% year-over-year growth, beating estimates by over $5 billion. But here's what the market missed. AWS alone generated $30.9 billion this quarter. That's a $123 billion annual run rate from just one division. Operating income surged 31%. This is a company hitting its stride on profitability. Yes, the stock dropped 7% after hours, but let me tell you why that's exactly the kind of short-sighted reaction that creates generational buying opportunities. Every time Amazon has invested heavily in infrastructure, short-term investors have panicked and long-term investors have gotten rich. Let's talk about what's really driving Amazon's future, the massive infrastructure build-out that's happening right now. Amazon is building the digital highways of the 21st century, and they're doing it faster than anyone else. AWS now operates in 32 geographic regions with 102 availability zones, and they're adding new capacity every month. This isn't just growth, this is dominance. But here's the real kicker. We're at the beginning of the AI revolution, and Amazon is perfectly positioned to capitalize. Every AI startup, every enterprise AI project, every machine learning application, they all need massive computing power. And guess who's building the infrastructure to power this revolution? Amazon Web Services. The AI boom isn't coming, it's here. And Amazon is the shovel seller in this gold rush. Amazon is investing billions in new data centers across the globe. They're not just building in major markets, they're establishing presence in emerging economies where cloud adoption is just beginning. Amazon spent over $75 billion on capital expenditures last year, mostly on AWS infrastructure. That's not an expense, that's building a moat that competitors can't cross. Here's why Amazon's long-term outlook is so compelling. They've built something no competitor can replicate quickly. While Microsoft and Google are growing fast, Amazon has a 5-year head start and the cash flow to maintain their lead. The beauty of Amazon's model is the flywheel effect. AWS profits fund retail expansion, retail scale drives more AWS demand, and we're just scratching the surface. IoT, autonomous vehicles, smart cities, every future technology needs cloud infrastructure. The global cloud market is projected to reach $1.6 trillion by 2030. If Amazon maintains just their current market share, that's a $500 billion revenue opportunity. This isn't about the next quarter or even the next year. This is about positioning for the next decade of digital transformation. So while short-term traders worry about quarterly guidance, I'm looking at a company that's building the infrastructure for the future of business. The recent dip, that's your entry point into one of the most compelling long-term growth stories in the market. If you found this analysis valuable, smash that like button and subscribe for more deep dive investment research. What's your take on Amazon's long-term prospects? Drop your thoughts in the comments below. Thanks for watching Market Minute, and remember, think long-term, invest smart.